General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, it's good to go. Knock out the chart work. Today's the 9th. Today, I kind of felt like today was manipulation. That bullish breaker is deleted. We didn't come up for the bearish OTE, and the new week opening gap is holding price. Why does this look like? Let me log out of this. Because world, did they update TradingView? Okay. So today is it feels manipulated. Kind of an inside day. We ran previous day's low and kind of stayed in EQ of this range. So that fits the manipulation box. We engage. Confidence level medium. Just the price action wasn't that good. We don't have an anchor point confirmed just yet either. No terminus not hit. Let's look at the delivery. Nas100.15. Okay. Manipulation day. New York reversal profile. Small range choppy day. 1 time frame. Still got this bearish OTE area up here. Now we created relative equal lows. So here, this actually got swept. So it's just a low now. It's not relative equal no more. We came up through here. It's internal range liquidity. Kind of like order pairing vibes. Hold up, wrong color. Came pretty much reaccumulated in this gap all day. Filled it. We came back through it and ran that top again. This area is interesting and this EO is interesting. Retracing to 50%. This range is also interesting too. So I would watch. No, I still would watch this one. Why does this look like this? Okay, because this is a different line. I still like lower. And I still like higher before lower because basically nothing changed. We didn't go nowhere from where we went yesterday. Yeah, we swept this, but that just means liquidity's been taken. So higher, take out these highs and then back low. Nothing changed in the plan. Price didn't move. We still in the same area. I'd rather see us take the highs and look for sales. Some days are just like this. Look at the daily chart. Finally look like we're leaving. We are allowed to leave as well. This is an atrocious range. Price is holding for FOMC Fed fund rate tomorrow. Let's look at silver. Just a large expansion day, small range Monday, very large range Tuesday. It will be a beautiful retracement. OTE. Monday led to a large range Tuesday. This is in what's- retracements, higher prices, but I'm watching just this expansion. This 3 bar swing low to this 3 bar swing high. I'll measure this, especially this count doesn't look too interesting. It kind of feels like we might have a breaker or something. Let's take off 60. We hit that even number. But that's the plan. Buy retracements. Watch this. Could FOMC set us up for a drop tomorrow? I doubt it. This rate cut news is bullish for silver. Next expansion. We can look for OT to get last swing. Let me OTE this box. And 618 is actually good enough. Oh, and we can put the rectangle got a alert now. Don't try the rectangle. I don't know what took them so long for that. Really, this is called the golden zone. Let me find gold. I think this is gold. Once per bar close. OTP zone. Well, I thought my first alert would be the order block, but nope, it's OTE. Let's go to the daily. Crazy expansion day. I think it's just getting ready. Ready for FOMC tomorrow. Euro. Euro. Hold on 1 second. Alright, let's finish this up. M15. Euro's been kind of funky. Like it wouldn't take off. Timing, I think. So this is not New York reversal. bar. Be a forex rapper like the other dudes. I like the forex rappers. Some of them. Let's see. We touching this order block too much. Let's take this off. Yeah, not ideal. Let me take this one and make it green. Previous week's low. Do we even really need it? We don't. This is order block model. I'm interested to see what happens at this order block. Not interested to get in a position because tomorrow is FOMC big news for the dollar, so it don't make sense. Now it's too late. And I wanted to buy. We selling up to the buy. So they making it to where if you want to catch that buy on FOMC, the whipsaw will take you out. It's extra dangerous. Before FOMC, no time to look for an entry now. Kind of wait until after the nose. Daily. We just waking. It's, okay, let's see. Just chopping. Just chopping. Don't force anything. Wait for clarity. Yeah, we're not gonna form fit no kind of nothing before FOMC. Framework play out today, no chopped. Which I learned about pattern, narrative, or myself. Less attached to P&L and more attached to process. What will I watch for tomorrow? Just wait for news. Or take the day off. Why does P&L look like that? P&L. There we go. All right, that's that on that. Y'all have a good day.